Hey guys, welcome back. In today's video, we are talking about the problems shorts are facing, resetting swaps, the market sell-off, and many more in this video. First, we're taking a look at this. AMC shorting update, shares swung 1.7 million to 1.5, back to 1.7 today, yesterday as low as 1 million before hitting 2 million. This constant shorting is why I still buy. So we updated this yesterday as well, but recently what we've been seeing is the volatility in the shares availability. Now, we talked about this, and it's about understanding the fact that when we are seeing the volatility in shares available, it is showing the fact that short sellers are trying to borrow as many shares as possible because they are desperate to keep the price of AMC down. Especially when we understand that it's gone to zero just recently. We've covered it in most of our videos. We understood that they are in desperate need of shares. And we also talked about in terms of when it does go back from zero back to 1 million or back to 2 million, it's not because they've returned those shares, but rather they rehypothecated more shares, aka they've created more synthetic shares to put into the circulation to then allow these short sellers to try and borrow more to continuously keep AMC suppressed. So when we are seeing the volatility in these short shares availability, it's showing us multiple things. Firstly, more synthetics are being created. And as we've always said, when there are more synthetics being created, it means the exit price of AMC is going up. It also means that it's accelerating the progress of when the squeeze of AMC will happen because it's drying up the liquidity of these short sellers. And we've seen recently how a lot more liquidity is being dried up as they don't have easy access to borrowed money anymore, like the reverse repo, like the banks who aren't willing to lend out money. And so many factors are showing why these short sellers are going to fail to get access to capital to suppress AMC. And another fact about understanding that if they're borrowing more shares, it shows that as of right now, they are extremely worried about AMC. They are in a position where they can't afford the AMC price to go up, not even 1%, not even 5%, not even 10%. And so when we are seeing them do this, we are understanding what's actually happening in the market. We're seeing just how stressed these short sellers are. And that's why we've always said in terms of how we can be able to understand the weaknesses that these short sellers are showing. And another thing is obviously looking at this for the dot pool. So we're looking at AMC dot pool and it's at 62%. Now, the interesting thing about this is when you take a look at AMC, we ended the day up 1%. And the reason why I want to talk about this is because we've seen how AMC's been having those red days last week. And the fact it was only down a few percent, even less than 1%. And we knew that this was because there was over 70% of dot pool being used. So it's extremely interesting when we are seeing the fact that first we have to understand 60% dot pool is still way above average. This is something that AMC is facing on the daily. And if anything, the average is around 65% like we've seen in the past. But what we also have to realize is the fact that it takes them over 70% of dot pool usage just to bring AMC down 1%. And despite having a 60% dot pool, AMC is still able to go up 1%. And so you should really understand kind of this buy sentiment there is for AMC. When we are able to see a more than average, a higher than average dot pool being used for a stock and is still able to go up, knowing the fact that most of the orders in the dot pool are actually buy orders, it should then let you understand just truly how many people are buying AMC and how little people are selling their AMC shares. And most of the price rejection happening, most of the price decline happening is because of the synthetic shares being created, is because the short sellers are always naked shorting, and it's very little because of the sell orders. And we've seen it from the orders that's been given and shown to us. And you have to realize is the FTDs, the naked shorts, if they're missing, it doesn't mean they stop naked shorting. They reset and erase them. So this is something we've said in the past before, and Crystal Ball also was mentioning it, and in terms of how they reset these numbers and how they lower it. So if you see the FTDs for AMC to go down, it isn't because they've covered these FTDs. We know that that's not the case, but rather they're resetting it. And so it doesn't show up on the list. And like we've said, there are multiple different indications that allows us to understand how they're still continuously naked shorting. one of which is obviously we talked about with the shares availability. And so if you are seeing the FTD's number going down, you have to realize two things. Firstly, they are able to reset it. So it means that these FTDs are not gone, but they're just not showing up on the list. Second is you're still seeing the indications of how they're still naked shorting AMC through other indications. And that's why we got to make sure with your own due diligence. It's why apes are always sharing, what's up there, what's out there for everyone to know. Furthermore, is about understanding how these short sellers are also showing signs of panic. We can see here Goldman now looking to rotate out of equities and into commodities. A storm is brewing. So what we are seeing is that Goldman Sachs has said they are seeing risk arising to create an environment where commodity price raises while equity and bonds sell off. And so we've talked about the recent gold and having its return, but the very interesting fact about this is some of the things we've mentioned in our recent videos. Firstly, we talked about this. Goldman is rotating out of equities, meaning they're trying to obviously sell off their stocks and buy into commodities. Now, what we've seen, despite them saying that, is recently we've actually been seeing Goldman Sachs increasing their accumulation in AMC. So whilst they see a risk in the stock market and are trying to sell off some of their other positions, they are still buying into AMC. And so that should already show you what institutions' thoughts are on AMC and how they believe that whilst all these other stocks are extremely overvalued and due for a sell-off and is going to decline greatly, the ones that are going to be safe and actually show a good return is going to be stocks like AMC, and hence why, despite what Goldman Sachs is saying, they're still buying into AMC. Secondly, it's also talking about the commodities, how they want to obviously buy into gold and such. And we've talked about this with understanding how iGrowth is obviously having a great return recently. You can see the 1 month, 6 month, year to date and 1 year return. And this is what it's showing. And so we are going to be continuously seeing them perform extremely well in the future as well. And how that obviously is going to affect AMC, as we know that AMC is also invested into them. And remember is the fact that we have been in this for a very long time. And so what they're trying to say is about to happen into the market. AMC has already positioned themselves very, very well into how to protect them. Not only are their own companies very, very safe, but the investments they made are what capital is obviously trying buying. And another great thing about this is about, whilst what we've just said with how Goldman Sachs is saying they are trying to rotate out of equities and buy into AMC, you have to realize they are also a short seller of AMC. So a short seller of AMC is saying to stay away from the stock market whilst buying more into AMC. And for me, that is the greatest sign of confidence, because it's showing how short sellers realize what sort of investment AMC is. They realize what they're doing. Now, for Goldman Sachs, maybe they don't have, the billions of synthetics like some other short sellers do, and that's why we've seen them flip. But it isn't a surprise to us to see anyone flip their short position into long when you realize what AMC has achieved in the past few quarters, in the past few years, and especially how they've put themselves and prepared themselves for the market that's about to happen. And so another thing is obviously looking at the reverse repo. We're sit at $20.9 billion. So one thing that we talked about is the easy access to liquidity that these short sellers have. And what we're seeing is that reverse repo is obviously one of the easiest access they can get. But the problem with that is right now it is dropping. Obviously, a few years ago, we've seen it at the high of 2 trillion. And now we're seeing it at $20.9 billion. And we're going to continue to see that to go down because over the past few months, that's what we've been saying and that's what we've been seeing. The reverse repo will have its volatility. It will potentially go back up to 30, maybe even 40. But at the end of the day, when you look at it from a long-term perspective, it is declining to the point where eventually we're going to see it go to zero. And when it goes to zero, that's going to be the scariest part, because there's going to be no easy liquidity access for these short sellers. Meaning, not only do they not get money to create more synthetics, to rehypothecate more, to reset the swaps on AMC, but also they won't even have access to liquidity just to finance the existing short positions. And so we're going to be seeing to a point where eventually it's going to go eat into their own positions. They're going to have to start selling their positions, covering their positions just to finance the short positions that's ongoing for AMC. And we can obviously see how that is going to turn out. And so you can realize right now why all of these institutions are trying to buy into AMC, because they realize that the inevitable is about to happen. They realize that these short sellers aren't going to be as strong as they were a few years ago, because right now, the market is seeing extreme stress and is due for a decline. As always, this is financial advice, so do take what to go and sell. Make sure you do your own due diligence research, and I'll catch you guys next time.